Let me also bring on board Devarsh Vakil. He is with us of HDFC Securities. Shivangi, of course, continues to be with us. Devarsh, I wonder if any of these insurance companies, let me start with that, start making it to the list. Growth is strong. Stock moves have been sideways for multiple years now. What next? What's keeping this entire sector under pressure, in your view, and does it turn around?
So, if you recollect, the move earlier was quite aggressive. Valuation had built in a lot of growth, which hasn't come through. But I think, as you mentioned, these stocks have now started appearing on our screeners in a valuation which is quite attractive. In fact, our company has come out with recently on the 1st of August, some of the stocks like Niva Bupa, LIC, and SBI Life with a buy rating, ICICI Lombard. So there are some stocks which are now appearing quite attractive, where we see about 20 to 25% kind of upside depending upon the different stocks available in these individual stocks. So as you mentioned, after quite a bit of underperformance, they are now looking attractive.
And Shivangi, how are some of these looking on charts to you?
Yes, of course, looking at the entire metal pack, we've seen that overall there is a lot of action today. And, sale is one counter which has seen a lot of OI shedding on the short side on an expiry to expiry basis. But overall, the kind of pullback move from the lower levels have been quite strong. And yes, these could definitely be kept on radar.
From the metals pack, Devarsh, would any of these interest you? Would you like ferrous, non-ferrous? How are you playing it?
So overall theme continues to be of these are internationally these are dollar denominated metals. So obviously we as the dollar weakens, there is a room for them to perform. But we had gone quite aggressively long on them or bullish on them around last November or so. From those levels, they have certainly run up, and now companies like non-ferrous company Hindustan Copper, where we have OFS or National Aluminium, are trading much beyond our intended targets. So, though the international prices are strong and they are likely to come through for their earnings, we will wait for better entry points for non-ferrous side. The steel or the ferrous is looking at interesting, but currently I don't have any stocks under coverage, so I won't be able to speak. But they are looking attractive. We are looking to attractively add coverage there.
Okay, so that's the take. Just quickly looking through some names, and Hindustan Copper really stands out. 7% lower on this one. Opportunity to buy, you reckon, Kunal?
So yeah, I think at current levels, 7-8% down for the stock. It's a good price point to initiate a buy in Hindustan Copper. And the only reason for that, of course, is because what's happening to the base asset classes. You've seen gold, silver, copper, etc. These asset classes have done reasonably well. They seem to be coming back into their after 5-6 months of price correction. So it looks like that I think this 6-7% dip on Hindustan Copper should be a good opportunity to buy into.
If you look at the indicative price, Kunal, 516 is the indicative price for the OFS which is coming in. Floor price is 514 and it's fully subscribed. At the total demand is 1.9 times, but 100% margin money is 1.13. So fully subscribed now. So we normally see that when there's a steep discount which is coming in, the stock falls on one day and the second day it comes back.
It bounces back.
So this could be one other case where when retail start buying, seeing the opportunity, they may go up.
Yeah, and we also look at the buffer. So the buffer is 515, 516 approximately.
Yeah.
Give or take, the current price is 535. So which means you're looking at another 4% down as the floor for the stock in the near term. So that's why I would believe that the current dip could be a good buying opportunity for traders who are waiting out for the stock in terms of buying the stock on dips.
Okay, Devarsh, I wonder whether you have a view. Hindustan Copper in particular at 536 rupees a piece. Should a viewer go long at this point in time? Is this an opportunity, both tactical but even from a medium to long term perspective?
Tactical, yes, there is an opportunity, as my colleague mentioned, because of technical factors, stock has corrected. The fundamental valuation, I'll be more comfortable around 330, 340 kind of, sorry, 420, 430 kind of levels. From there, it has run up. Right now, it's 530 or so. So, valuation doesn't give me that much comfort here. And that's why, for a longer term investors, I would wait out because we had started coverage in November 25. From there, those level it has run up a lot. So I wait for dip to go for a longer term investments. Metals across the board have done really well. I think we should wait for better levels before initiating long term investments.
Just probably wait for dips. I think that's Devarsh's call. But Shivangi, let me come straight to you. We've seen a bit of a spike on the Nifty. We've turned back into the green and turned back quite swiftly into the green. Give us a sense what's playing out, and can this sustain, or is this just expiry day moves or pre-moves, if I can call it that? What's playing out?
Yes, quite aggressively. We've seen that in the last 10 minutes as we speak, Nifty has kind of moved quite significantly. And we are now, at the 24,250 mark, which is again, above the important immediate resistances for the day. We are yet to cross the previous day's high, of course, but overall good comeback. And the closing, for this one would be very crucial to decide the next series and the next outlook. We've been making, 3 dojis from the last 3 series on an expiry to expiry basis chart. So there's indecisiveness, but at the same time there is support-based buying with lack of follow-up action at the higher zone. So we need a fresh trigger of buying above 24,250 for this to sustain. But of course, at these levels, the kind of closing that we're heading into, if it holds at these levels, is quite positive for the Nifty index.
Okay. Thank you so much, Shivangi, for that perspective. We'll let you go. Thanks for all of the views. All right, Kunal, quickly your take with regard to this spike and what plays out maybe over the next 40 minutes or so. Since we have you, we can hold you to it.
So it looks like that a mini expiry move has started off, something which is the market's not been accustomed to pre the 3 o'clock move. So, but I think we need to see how this pans out. It's good to see many of the large cap stocks recovering. I think at one point Reliance was also at the day's high, the last I had seen. Of course, with the recovery across slew of the banking names, the PSUs, defense stocks making a good comeback. L&T, I think, if I'm not wrong, was also at one point hit back towards the day's high. So it seems that many of the large cap names are trying to make a comeback. So, and in effect, as a strong market internal move, I think this is a very strong signal.
And there's a lot of unwinding of call options which is happening, and that's what is also leading to the recovery of Nifty. But I think we need to step into a short break, and we'll come back after that. Welcome back. You're watching Closing Trades, and we're in the last 30 minutes of cash market trading and 15 minutes away from cash as well. And we're seeing a hectic call unwinding which is happening at this point in time, with the Nifty currently up 0.12% about the 24,250 mark, almost 24,250 mark. So that's some kind of shorts getting covered at this point as we speak there. But one set of stocks which are very active is fertilizer stocks today, which are in focus after Russian President Vladimir Putin offered to increase fertilizer supplies to India. Meryl joins us to explain what this means for the industry.
That's right. So fertilizer stocks are seen in focus today after a fresh geopolitical development on that front. Russian President Vladimir Putin has assured India of uninterrupted fertilizer supplies, and has also said that Russia is now working to increase shipments to meet the requirements of Indian farmers over here. Russia is already India's largest fertilizer supplier, and this is particularly for urea, which faced severe shortages, and with imports from Russia rising nearly 40% in 2025. Now, this development is particularly important after the recent West Asia crisis and the supply disruption, as well as the higher freight costs that we are seeing for transports and shipping coming from that region. This had previously raised concerns around fertilizer availability, and the Indian government had also been diversifying sourcing and maintaining adequate stocks for fertilizer use leading up to the Rabi season as well. For the markets, the key beneficiaries of this are FACT, RCF, Paradeep Phosphates and National Fertilizers, all of which we have seen buzzing strongly in trade today. So now the market will therefore be watching out for any long-term supply agreements, potential joint ventures, and also any actual ramp-up in Russian shipments on ground as well.
Okay, thank you so much for that, Meryl. Let me, in fact, also take you through what, and in fact, why don't you listen in to what Putin himself had to say during his meet with External Affairs Minister Jaishankar.
We are happy to meet you, Your Excellency. I know that you, with your Russian colleague, Mr. Montrov, who is the head of the Russian part, of the Russian side of the Intergovernmental Commission, you have already had very productive work. I believe you have discussed the most important issues. There are numerous, and one of them are energy resources, fertilizer shipments, and we are doing everything possible in order to provide fertilizers for Indian farmers and the agricultural sector. We have been increasing the shipment of fertilizers, and we are ready to continue doing this, including all other issues. Nuclear energy cooperation in high technology areas, in other directions and other dimensions, they all are on the agenda, and they are progressing quite efficiently.
Okay, so that's with regard to what's playing out and probably some perspective on how the chemical names are moving this week. The Lenskart is the other one. Lenskart has seen more than 15,000 crore of stake sales by PE investors and sovereign wealth funds since November 2025. That's when it got listed. And this is across May to August. So early stage investors, SoftBank, Idea, Temasek have collectively sold around 14% of Lenskart's outstanding equity. But will this trend continue, and why are major investors really checking out? Snehi joins in.
Well, absolutely. So Lenskart has been a stock that has been in focus of late on the back of major block and bulk deals that we've been seeing with early stage investors and PE investors cashing out either partly or entirely from the company. Just a little bit about the kind of stock move that we've seen. Remember, the issue price in the IPO was 402 rupees per share on the upper band, and the listing price, the company listed with a slight discount on the bosses at 395 rupees per share. But since then, the kind of run up that Lenskart has seen in the 9 months since its listing, yesterday the stock closed at 657 rupees per share, and that marks an upside of 66% just in the 9 months that the company has been listed. So on the back of this, we've seen a lot of early stage investors cashing out, investor groups like PE, that's an early stage investors, to the total tune of 5,316 crore rupees. SoftBank, which was one of the early promoters of the company, 5,860 crores is the tune of selling that we've seen coming in from SoftBank. ADIA plus Temasek combined 3,900 crore rupees worth of stake has been sold, taking the total stake sale till date in this company post its listing to 15,076 crore rupees. Let's try and understand where this first wave of stake sale came from, and that was on 8th of May. Why 8th May is an important day for Lenskart is when the 6-month IPO lock-in period for its anchor investors and PE investors opened, and we've seen a whole wave of sellers coming in on that day. The biggest one led by Alpha Wave, that was an early PE investor, 2.14% stake sold. They continue to hold 1.2% stake in the company, and this was a big deal that we saw taking place because this was to the tune of 1,762 crore rupees. These are all the other sellers. Most of them have completely exited their stake. You had Bird's Eye View that exited its about 2% stake for a deal of 1,578 crore rupees, and all these other names had stake sales between 140 and 283 crore rupees a deal each, and these are some of the sellers who have completely cashed out of Lenskart ever since its listing on the 8th of May. Now let's talk about the latest deal that we've seen in Lenskart, and that has come in from the seller SoftBank, wherein SoftBank has sold 2.58% stake in the company. It continues to hold equity in the company right now, but 4.5 crores, that's the tune of the stake sale that they have sold at a value of 2,890 crore rupees per share and a share price of 641.7 rupees per share. The stake that they continue to hold in the company now is 7.3% thereabouts. Let's also talk about some of the other big names that we've seen cashing out. Before that, let's just try and understand the kind of buyers that we've seen for this stake sale that we've seen from SoftBank yesterday. You've got some marquee investors like the NPS Trust, Goldman Sachs, a lot of domestic mutual fund houses, Franklin Templeton, Vanguard, as well as Edelweiss, Kotak, ICICI, Motilal Oswal and HSBC mutual funds who've checked into the stake that SoftBank has sold. Next up, let's also talk about some other interesting facts about the kind of big investor exits that we've seen coming in. You've seen in the month of May, PE and early stage investors exiting about 5,316 crore rupees worth of share. SoftBank and ADI have sold 4,930 crores. Temasek has checked out with 1,940 crore rupees worth of stake sale. And SoftBank, that's the most recent deal that we've seen yesterday, 2,890 crore. That's the tune at which the stake sale has happened. Now let's try and understand why is so much checking out happening from Lenskart. This is partial or full monetization happening by early investors because they've made handsome returns on this stock. Remember, 8th May, like we mentioned, was the 6-month lock-in expiry as well, and the stock has already generated strong returns of 66% since its listing, and that makes it a very lucrative exit price for a lot of its early stage investors. So that in a nutshell kind of sums up the kind of action that we've seen coming in Lenskart in terms of the bulk and block deals that we've seen from early stage investor selling.
Thanks, Sneh, for that update on Lenskart. So, some institutional selling, and if you look at the buyers, it's mainly long-only funds which are buying Lenskart there. Devash, what's your view on Lenskart?
So there is a massive unorganized to organized shift which they are trying to penetrate, and their vertical integration margins are superior. So obviously, there is a case for investments and omni-channel model they have. So there is a case for investments, but as your colleague pointed out, in the last 9 months, it has run up a lot, and now it is not under the margin of safety, which we usually eye for while investing. So we'll wait for a dip or a better opportunities. On e-commerce side or app-based companies, we do have buy currently on stocks like Swiggy, where we see quite a bit of upside, more than 50% upside over the next couple of years. So if somebody is looking to invest in app-based companies or e-commerce platforms, I think they can have a look at Swiggy at this point of time.
We're just a few minutes away from closing auction trade, which is coming in, and we're seeing a good amount of some bit of put writing coming in as well. So that's giving some support to the Nifty. Kunal, 24,250, is that going to be a support today?
It looks like that that's going to be like the pivot support for the index, and I also sense that I think many of the large cap names are making a good comeback. So, we were talking about Reliance some time back, L&T's made a good comeback, Bajaj Finance, the last I'd seen, I think has made a decent comeback. The India VIX has ebbed off. I was looking at the intraday charts for few of the F&O stocks like IREDA, etc. These stocks have jumped up 3-4%. So it looks like that this is more of a maybe a rollover effect buying for many of the futures contract, and that's led to the buying for the index, and hopefully that should probably put in a floor for the Nifty for the expiry today.
Okay. Also, you've got all of these stocks, right, Kunal? These fertilizer stocks which are in focus today. How are they looking like on charts?
Yeah, it's so after this 15% up move for FACT and other names, it's going to be difficult to go for a buy over here because the near-term trend for these stocks were deeply oversold. And just like, for example, what happened to Vishal Mega Mart yesterday, the stock was down and out in the last, I think, 6 months or so, corrected by more than 30-35%. Saw a rally yesterday, and today the stock has seen a price correction. I would probably believe that many of these, fertilizer names, if they don't come back to their intraday highs, and if they close substantially below the intraday highs, there could be slight bit of more selling pressure, and this could probably be like a 1 day or a couple of days of a bounce back trade on the back of news flow.
Kunal, what do you say about this high rollover spread which is there to to the next month, is it normal for Nifty to have that kind of high rollover spread?
No, it's not that normal, because I think historically we've seen the last, I think, 3-4 expiries, the spread to be around 120 points plus minus for the Nifty. So this 170, 175 point spread for the index is a tad bit on the higher side. But I'm not sure whether it's trying to adjust to the cash also. But maybe I think we'll need to see start the fresh expiry, because generally what happens is, if there is any kind of an excess or reduction in terms of premium for the index, it generally gets corrected itself in the first 1 to 2 days of the fresh expiry.
We also have Avi joining us to give us an update on Sigma Advanced, which is logged in the upper circuit after securing an additional 1,600 crore long-term contract with Rolls-Royce Aerospace UK to the recently acquired UK subsidiary. That's Bromford Precision Solutions. Avi, what are the details that you have?
So Sigma Advanced system is buzzing in trade, and as you rightly mentioned, it is on the upper circuit on back of receiving a 1,600 crore rupees order from Rolls-Royce Aerospace UK. This order has been received in its subsidiary Bromford Precision, which it recently acquired. This order is received after the recently concluded 3,800 crore rupees Rolls-Royce agreement. So now in total, this contract is now valued at 5,400 crore rupees with Rolls-Royce Aerospace UK, which is a very big thing for Sigma Advanced. So what Bromford will manufacture under this is aerospace rings, casings, lock plates and other critical engine structures for aerospace parts. This also in a way validates the Bromford acquisition, as this deal comes right after the acquisition of Bromford and expands Sigma's addressable market with existing customers. Some brief about Bromford is that it specializes in manufacturing of high precision engine units for aerospace players and has OEM approvals from the likes of Rolls-Royce and Siemens. So big news coming in for Sigma Advanced System, as it has received a 1,600 crore rupees order from Rolls-Royce UK and is built on the 3,800 crore rupees deal it recently concluded.
Okay, thank you so much for that, Avi. Devarsh, I wonder how you're playing the defense theme.
So we are quite positive on defense team. We had covered many of the stocks, especially on the shipyard side, where we see a lot of growth ahead. On the defense electronic side also, we have few stocks under coverage. We like as companies like Paras is there, Apollo is there under our coverage, BEL and HL are there, where we have substantial upside left. So certain shipyards like Cochin, GRSC and BEL, HL, these are the companies under our coverage, and we continue to favor them. It's a multi-year theme. Government policy support is there. And the way geopolitics are panning out, I think the next few years we'll continue to see theme towards indigenization, government support will be there. So obviously we continue to like them, and long-term investors should continue to hold them.
Fertilizers as a pack, does anything change? Fertilizers, chemicals, is there something which is standing out? Could you give us an idea or two from there?
So we don't have any fertilizer stocks under coverage, but
Okay.
the theme is there that many of the companies are trying to increase margin by looking at nano, urea, other nutrients, and government supports to increase the domestic production. So right now, today we have some geopolitical development. That's why those stocks are up. But longer term, I think it makes sense as the monsoon are lesser. We will see a lot of consumption and increase in requirement for these agri inputs. So it makes sense to keep them on radar.
Also, TCS has signed a 5-year strategic deal worth 1.25 billion euros with Porsche, alongside its acquisition of the company's automotive consulting arm MHP for 320 million euros. TCS CEO Kirti Vasan spoke to ET Now to explain how the deal helps the Indian IT giant.
The deep capabilities MHP has in digital advisory and transformation, S/4HANA and operations in the automobile segment, and now on also the client base MHP has in Europe. And now you combine it with the AI capability, the scale, the depth that TCS brings. Now, these two put together, we are envisaging what we call a AI Center of Excellence for mobility transformation. So we will be able to provide services across the entire value chain of AI mobility in terms of product, engineering, manufacturing, and of course customer experience. We'll be able to transform it not only for Porsche as the customer zero, we'll be able to approach and provide more services to other automobile companies and manufacturing companies in Europe. So the opportunity to do more, opportunity to transform AI mobility using AI are the motivations for us.
Volkswagen is also one customer. Please understand, I don't want to disclose any other customers. Obviously, Volkswagen I can mention, but this is not part of the deal. Okay, and the 1.25 billion you were mentioning is only the revenue part based on Porsche, nobody else. So the revenue potential for MHP in the future, I guess, is much higher than that, and it is already today if you talk about around 700 million a year.
So TCS and Porsche CEOs are talking about the deal. Devash, how do you look at IT companies like TCS?
So we have a buy rating. Around April, we turned from underweight to equal weight in IT companies and started recommending them as a part of the coverage. The second tier or the mid-cap IT companies, there we have more percentage upside. But when you look at the global comparables and see their valuation and valuation of our large IT companies, I think the worst seems to be behind them, and they will be able to give good growth from here. The kind of deal which we saw on TCS gives them the earnings visibility also, which was earlier thought that will not be there. The IT companies have the balance sheet, they have the financial resources to go out and look at such deals where they can get the growth back into the Indian outsourcing industry. So I think one should now, if you don't have IT stocks under your portfolio, you should add them. Smaller stocks like Emphasis, Cyient, there we have more percentage upside left. So depending upon your risk capacity, you should look at larger or smaller IT companies.
We're seeing spikes coming into some of the IT companies, starting off with Infosys, where in the cash closing auction, it's up nearly 2.8%, followed by Tech Mahindra, where we have seen a jump of 1%. You have Wipro up 0.6%. You have HCL Tech up 0.59% in the cash session. So a lot of spikes coming into the IT companies during the closing auction session. And if you look at the IT index, it's almost flat at this point in time as we trade. And Nifty 24,260, Kunal, I think that's where I think the index is going to close, if I'm not wrong.
Yeah, it looks like that pivot support of 24,250 should hold on, and I would sense that I think other than IT, even a few of the banking stocks, I was looking at it in terms of the charts, are making a decent up move for themselves, or at least some bit of a comeback for themselves. So it looks like that I think the move should trickle into the start of the next expiry. Now we need to see whether it's closing of the short positions into the current series, which is leading to the up move, or whether it's the demand for the next series, which is the September series, which is leading to this up move for many of the stocks, whether it's the IT names or whether it's the banking stocks, etc. So that I believe that demarcation between short covering and fresh long built up into these stocks, I think could probably be the rationale which I think we need to wait out for.
But the spike is real, right, Kunal? You look at the index in terms of the indicative close, it was at 24,260 at 315. We're currently staring at an 80-point higher number. Indicative, of course. We still need to wait and watch. But we're at 24,330 or thereabouts. Sustainable, this kind of a move, and some of the movers outside of IT, Tata Steel, Apollo Hospitals, any view with regard to some of the bigger movers?
Yeah, I think Tata Steel is something which could be very, very interesting because we're discussing this entire metal theme since the last couple of days. Apparently, Tata Steel has been one of the underperformers of the metal pack. But now, what we saw in the last 3 days consecutively for Tata Steel is that the volumes on the daily charts had started to close on a much higher basis. So even though the stock was stagnating around the 180 mark, the volumes kept on inching up higher for Tata Steel. That's generally a indication that you're looking at delivery-based buying or maybe some sort of accumulation happening for Tata Steel. So if the entire metal sector does well, for example, we saw yesterday JSW Steel, etc., showing breakout, I think it could be a matter of time that even Tata Steel could join the wagon over here.
In fact, what we are seeing today is a turnover of roughly around 1,200-1,300 crores in the closing auction session, which is slightly higher than the daily average of 1,000 odd crores. Yeah. So 20% higher turnover, which is coming into the closing auction as we speak. We've hit 325, so it's going to be a close down of positions, which will happen over the next few minutes based on the orders which are there. But it's going to be a good session, but not much volatility, right? This is the first monthly cash expiry which is there in that sense.
See, what happened many years back when weekly expiries were introduced, when monthly expiries, etc., were markets take time to adjust to it. But once that adjustment is done, once the phenomena is known for market participants, that's where new set of strategies they tend to arise into such kind of situations. So I believe it could be a matter of time, and I think today is the first day where you're seeing the monthly expiry, the volume being slightly higher, maybe the positions being rolled over. A majority of it, we saw that in the rollovers data yesterday closing, today at the start also, that majority of the rollovers had already happened. So today is more like an experimental move from the markets as such, but once we get accustomed to it, that's where I would believe that the markets will settle into quite well.
There was one set of stocks which has which have done well is the hospital stocks, Max and Apollo, and now even today Manipal Hospital is crossing the 1,000 crore, 1 lakh crore market cap. How do you look at these stocks?
Yeah, so I'll speak about hospital stocks in a minute. I just wanted to also talk about the Nifty. I think for last 3-4 months, Nifty or the markets have been stuck here in this range. In fact, around Independence Day also, we got a lot of memes that the markets have been stuck around this 24,000 level. I think these are the signs where we think we are finally ready to break out. The earnings season, which is not much discussed, we have seen a robust growth, around 14-15% growth in the earnings, and next year projections are also very high. Depending upon the, if you look at the oil marketing company or not, we are looking at 14-15% growth. So today we are seeing some spike in the closing session. I think these are the signs for things to come. Post this geopolitical uncertainty, we are ready to break out of this range and moving towards higher levels. So viewers, investors who are looking to deploy capital, I think this is a very good time to deploy. And banking and finance is the area where we feel that maximum exposure should be there. Now, talking about the hospitals, they obviously they have a secular growth story, but current valuations are quite steep. Except one HCV, I think most of these hospitals are doing capacity expansion. That means over the next 1 year, when the new beds come into the market, there will be a lot of pressure on margins. And I think these valuations, what they are currently discounting is higher margins. So we are a little cautious on hospital stocks as of now. NH and others which have some upside room on the valuation front. But overall, as a sector, we are cautious on the hospitals.
Okay, all right, we're starting to wrap down, at least for the cash market today. There's obviously some bit of movement in the last 14 odd minutes since the reference price has come to us, and IT is one of those bigger movers, within the larger, a pool of movers since 315, and that's now how we look at things. Tata Steel has been a percent cool off from the highs of the day. So you're seeing some bit of a correction as well at play, some choppiness visible. In terms of some of the bigger movers, I just want to quickly mark out Apollo Hospitals, Infi. Infi was just on your screen a minute or so ago. Nestle is the other one, and NTPC is the other one. So those are just some of your movers, the bigger movers in the last 10 odd minutes of trade. So that's how it's playing out. The Nifty holding fort around 115 odd points higher, 24,330 levels is what we are looking at this point of time in the cash market at close. What's played out in the broader markets, the Nifty mid-cap has done fairly well for itself, 0.5% higher, and that spike also attributed to the last maybe half an hour to 40 minutes in terms of the trade. And that's where the spike has really come from, even on the Nifty 150 mid-cap 150 index, and the small cap actually has closed in the red. But nonetheless, there has been gains which both the Nifty small cap as well as the mid-cap have clocked in the last maybe 40 odd minutes of trade today. In terms of the Nifty 500 bucket as well, that bucket, the breadth has improved as the day has gone by visibly. We're at 270 advances to 230 declines. We started the day 1:3 on the advanced decline, so clearly looking much better. 11.5% move on fact. Vodafone Idea is the other one. Kunal, I'm curious to know, Vodafone at these levels, and let me also throw in an Airtel and Indus Towers, the entire telecom pack. Is it only a Vodafone-led move, or would you be positive across the board?
In fact, yesterday I had recommended Vodafone Idea as one of the picks on closing, because my expectation was that the stock, even though it was a little sideways, could probably be at the cusp of a breakout. The volumes, the price, lack of sensitivity as such, I think sort of indicated that we are looking at a cusp of a momentum breakout for Vodafone Idea. The momentum breakout seems to have happened today. Now for the stock, we are looking at a point where the stock could continue to move up higher from current levels. The volumes have been little bit higher for the stock, but comparatively, when you look at this at the last time or the previous time when the stock had crossed 15, the volumes are comparatively low. So which means that when you see a low volume participation in terms of a breakout, we generally expect that either the breakout is going to be very, very quick, and traders, they generally tend to catch up quite late into the stock price. So in effect, I would believe 15.75, 16 could be the next set of target for Vodafone Idea.
Do you see a turnaround happening in Vodafone? Company able to raise debt, start its capex?
Was it for me?
Yeah, Devas, for you.
Yeah, so government is supporting the company. They do not want the industry to remain just two-player. The overall ARPUs are headed higher. We had covered Idea. Bharti is also, we have been recommending from time to time as a overall, though we may be a little underweight from the index, the overall as a sector, telecom can continue to perform based on increasing ARPUs and increasing the usage. So investors can look at this sector for longer.
Okay. Just trying to get a sense as to what else is moving, and let's pull out some stocks, some real buzzers in trade, frankly, today. Angel One, 5% higher. City Union Bank has moved up 4.5% to 5%. IREDA is the other one. Pine Labs has also moved up 4.25%. And Acutaas Chemicals, that one is up 4% as well. So it's a diverse set, but a couple of the platforms, and especially within the financials, the platforms in terms of the movers are visible. Let's also pull out a Grow. I believe that one also is perked up in trade. This entire pack, Kunal, there you go, 3.5% higher on Grow. I know you spoke a little bit about Paytm, but if you can give us a perspective again as to how you're seeing this one on charts, fresh longs at 1718 rupees a piece, whether one should do that or not. And if I can throw in an Angel One, a Pine Labs, a Grow, I know all of them not in the same bucket per se, but within the fintech space, those are the ones which seem to be doing well. How are you looking at them on charts?
Yeah, this could be a good strategy to try and initiate fresh buys into Angel One, Grow, etc. Because many of these stocks are coming out after almost like a 1.5 odd month of a price correction. Angel One was a stock which was almost at 330, 340 thereabouts towards a recent correction where the stock fell down to 280, 290 mark. So after a good 50 odd point correction for Angel One, the stock is now at the cusp of a revival or a breakout, or at least some sort of a recovery from the recent price correction. Same is the case with Grow. The stock, I think last month or the end of July, the stock was closer to 220 odd mark, fell down to 190, 195, and now it's coming back above the 200 level. So risk reward into many of these stocks attractive. A phase of price correction is behind. These stocks are, hopefully wanting to find some fresh buyers or fresh news flow. Once that happens for Grow as well as Angel One, and add to that, many of the other broking firms also. Who's looking at Motilal Oswal Financial Services? That stock has made a good comeback. Edelweiss, I think, has made a good comeback. JM Financial on the recent charts has seen a good up move. So many of these stocks on the broking firm space as such are the ones which are looking attractive.
If you look at what's how the F&O market is doing today, we ended the Nifty about 24,334, and that's a little surprising because you have seen the spikes coming into IT companies in the last 15 minutes of trade, and that led to that spike with the Nifty IT itself up 0.6% at close. So Nifty 50 up 0.5%, open interest positions going up by nearly 33% in the last half an hour of trade, and what we are looking at is a rollover percentage of roughly around 69-70%. It's still little lower than what we saw from July to August. August to September has been slightly low on the Nifty front. So the open interest is up nearly 33% up. Nifty Bank flat. There too we've seen the open interest jump nearly 39% in terms of how the rollovers have happened there. Look at what's happening in the Nifty bank constituent. You're going to see short build-up happening in HDFC Bank and Axis, SBI, ICICI, Kotak, PNB, Bank of India, Bank of Baroda, all seeing some bit of a long build-up happening there. So the fresh longs getting or rollovers happening into September series, and longs getting added there in that series for some of the Nifty Bank constituents as you speak. Also look at how the puts and call writers have been doing. 24,200 and 24,300 have been active, especially 24,300 became active in the last 10 minutes after the Nifty closed about 24,300 levels. You have, if you look at the distribution, it gives you a good indication of where it is. Good support coming at 24,200 for the Nifty for September 1. Which is next week's expiry. So a lot of positions getting built up for Nifty at 24,200 levels to begin with. So if you look at the gainers, Vodafone Idea up nearly 8%, Paytm is up 5.5, Angel One is up 5% on the back of short covering. In the losing pack, you have Federal Bank, long unwind seen there. Dalmia Bharat is seeing long unwind. Oil India is seeing a long unwind there. Open interest gainers, you have if you look at Info Edge, there's a long build up happening there. 41% jump in open interest for Info Edge. 361 Jubilant Food, all seeing some longs getting added in today's trade. In the losers pack, you have NMDC seeing a short covering. You have Vodafone Idea seeing a short covering of nearly 73% of open interest unwind, which we have seen there, and the stock up nearly 8% odd, and sale is up on the back of short covering in today's trade there. So it's Nifty almost ending 0.5% higher, 24,334. Last 15 minutes of spike, 100 points odd, which we saw. Is that will the index hold that tomorrow morning?
It looks like that it should hold, Sanjay, and this break of 24,300 I think is a good break, because this is what the markets were waiting for in the last couple of days. There was this good reprieve or a good comeback for the Nifty from I think 2 days or 3 days back, at 24,000 mark, which we tested. So this is a big, I would say, a line of sand the markets have finally managed to broken into, and this could probably trigger some round of short covering across slew of the other sectors and large cap names, large cap stocks. So I would believe that the break of 24,300 mark and close above these levels, I think is a very strong indication. This, I think, coupled with hopefully a move which comes back into the likes of Bank Nifty, financial services, real estate index, some bit of short covering into the IT stocks, I think could probably be the icing on the cake.
Devash, what's your take for the index? Do you have a short term and a medium term target for the index?
No, we don't have a specific target for index, but I'm actually quite bullish on the markets. Given the earnings which we saw, I was just mentioning, as we have seen very healthy earnings growth this time. If we just remove the OMC companies, then the companies under our coverage have seen around 18% kind of a growth. Our projection is that for FY27 earnings will be 14% higher, for FY28 15% higher. And this current uncertain geopolitical environment and crude volatility will eventually subside. So at current around 19 times earnings, and if we see the 10-year average, we have been trading around 20.5 times earnings. So there is room for at least 10 to 15% upside in the Nifty over the next 1 year. And as I just mentioned, we have been stuck in this range for last 3-4 months and around 24,000 mark. So index finally seems ready to break out, and on back of financials and some recovery in IT valuations, we should head higher from here.
Okay, all right. We've settled in at 24,330, which is certainly looking good from a technical standpoint, from what Kunal has said. Devarsh, thank you so much for joining us, giving us that perspective. Kunal, we'll let you go as well. On that note, thanks so much for your perspective as well.